Jamie Dimon, the CEO of Chase Bank, says to shut down crypto, and is Cardano about to make a massive comeback? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Altcoin Buzz Alpha wants to congratulate you all on a very profitable month of November. Bitcoin rallied past $35,000, is now hovering around 44. On November 4th, we published an alpha report and mentioned the Bitcoin targets. As we had a target in mind, we planned our November strategy meticulously, and we all achieved our targets. We had overall 61% profit in Bitcoin, 2x profit on 6 of our portfolio coins, 3x profit on our gem calls, 3 to 5x profits on 4 IDOs, and $1,800 profit on buy and sell calls. Join Altcoin Buzz Alpha for only $15 a month and get an 8% discount on yearly subscriptions. Check out the description for more details. Bitcoin has gained a new generation of hodlers in the past 3 years as stubborn investors refuse to sell. Data from the popular HODL waves metric shows that people who bought Bitcoin in late 2020 are still holding on their coins. Bitcoin's longer-term investors are in no mood to decrease their exposure despite the 2023 bull run. HODL waves, which groups the Bitcoin supply by the time elapsed since each coin last moved, shows the particular age bond growing considerably over the past year. Since the bear market bottomed in late 2022, unmoved coins in 2 to 3 years have increased their presence within the overall supply considerably. Last December, the group accounted for 8% of the total supply. Now it's increased its share to more than 15%. Put another way, those who bought Bitcoin between December 2020 and December 2021 have resisted the urge to engage in mass profit taking. Philip Swift, creator of Look Into Bitcoin, which hosts HODL Waves, frequently comments on the long-term holder phenomenon as seasoned investors become more entrenched in their positions over time, saying long-term Bitcoiners are not selling their coins until we go way higher. The group, which contrasts the long-term holders, the short-term holders, or speculators, has by contrast up profit taking over the past week. Bitcoin passing 40K triggered a snap sell response from these entities, which sold off $4.5 billion of Bitcoin in a matter of days. This had little impact on spot markets in an environment where long-term holders already controlled more of the supply than ever before. According to a December 5th report from research firm S3 Partners, traders who bet against publicly traded crypto firms such as Coinbase, MicroStrategy, and Marathon Digital are now nursing $6 billion in on-paper losses. The bulk of the losses for short sellers have come in the last 3 months. After Bitcoin fell to a quarterly low of $25,000 on September 11th, short sellers increased their exposure to what they thought was an overbought sector. Unknown to the traders loading up on shorts, Bitcoin would stage a 77% rally, reaching a new yearly high of $44,000 on December 5th. This rapid upside move induced $2.65 billion in losses for short sellers. Bitcoin's 161% year-to-date rally has been a significant driver for crypto firms' share prices, with Coinbase and MicroStrategy growing 312% and 285% respectively within the same time frame. Also, make sure to check out Randy's TA video on our Altcoin Buzz trading channel to see how he's trading Bitcoin right now. Cardano's ADA saw its market cap surge by over $1 billion in just 24 hours amid a new wave of intense buying pressure. At the time of writing, ADA's overall market cap stands at $15.5 billion, cementing it as the 8th largest cryptocurrency. The latest push saw ADA rally from intraday lows of 41 cents to a peak of 43.5, notching a 9% gain. The move has added further momentum to a revival that has now brought ADA 50% off its mid-June lows. Development activities around decentralized applications on the network also continue to grow at a steady pace. Over 412 projects are now building on the platform, whether in early fundraising stages or actively maintain protocols leveraging Cardano's base layer. While competition remains fierce across protocol ecosystems in the race towards Web3 mass adoption, Cardano's proponents believe in the blockchain's methodically constructed architecture, focused on security and scalability, sets it apart from rival smart contract platforms. As markets pause to take a breath amid the euphoric run this past week, it appears poised to capitalize further on any pullback should traders maintain conviction during moments of hesitation. LE charts on X wrote, in the last 3 months, there's been a significant increase in ADA transactions over $100,000, reaching new highs consistently. This surge points to a growing interest in ADA from institutional players and whales, which is usually a precursor to price spikes. On-chain analysts at Sentiment wrote, Cardano's market value is up 7% today, despite the majority of crypto dropping Wednesday. The total ADA addresses have been shrinking, which is a good sign. Typically, declining wallets is a sign of small holders capitulating and selling to whales at a loss. JP Morgan Chase CEO Jamie Dimon has again slammed crypto, today saying that he'd close it down if he were the US government.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case. because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have been built up over many years, know your customer, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
Dimon's comments came after Elizabeth Warren asked the billionaire bank boss why terrorists, drug traffickers, and rogue nations like crypto. He went on to add that you can move money almost instantaneously with digital assets and that it was somewhat anonymous. Dimon's latest comments are not the first time he's criticized Bitcoin and other cryptocurrencies. He's famously called Bitcoin a fraud back in 2017 and criticized his own daughter because she bought Bitcoin. The chief of the world's biggest bank also once questioned whether Bitcoin would really have its supply capped at 21 million coins, saying maybe it's going to get to 21 million and Satoshi's picture is going to come up and laugh at you all. The crypto industry was quick to point out the amount of times JP Morgan and other banks have been fined by regulators for breaking rules. Gerbax wrote on X, JP Morgan CEO Jamie Dimon, the only true use case for is for criminals, drug traffickers, money laundering, and tax avoidance. The data, since 2000, regulators fined banks over 7,400 times, totaling to fines of $380 billion. Banks should stay silent. And Niraj wrote, remember when JP Morgan got fined for not only failing to report Madoff's suspicious transactions, but using the information to protect his own investments. Crypto advocates often push back at the notion that Bitcoin or other digital assets are disproportionately used by criminals, highlighting the fact that Bitcoin, in particular, operates on a transparent ledger and transactions can very easily be tracked. Some government officials in the past, notably former CIA Director Michael Morrell, have suggested that Bitcoin is actually a boon for law enforcement, considering how transparent it really is. Polygon co-founder Jordi Bellina says 2024 will see the amalgamation of Polygon's various Ethereum Layer 2 scaling networks to complete its Polygon 2.0 cross-chain coordination protocol. Bellina said 2024 would be a litmus test to see how Polygon's ecosystem's various networks can scale and integrate through implementation of zero-knowledge proofs, or ZK proofs, adding 2024 is going to be very much about Polygon 2.0, having all these networks connected, sharing the liquidity, and sharing the composability between networks with different flavors. Bellina added that several networks that comprise Polygon's ecosystem feature their own tokens, sequencers, and data availability solutions. The evolution to Polygon 2.0 is set to include several upgrades that will unify these different protocols with ZK-proof technology into continuous unbounded block space. The scaling technology firm unveiled Polygon 2.0 in June 2023, outlining plans for a scaling ecosystem comprising of 4 protocol layers. Polygon released its open-source ZK EVM mainnet beta in March 2023, which delivers reduced transaction costs and increased throughput of smart contract deployments. The technology allows thousands of transactions to be batched off-chain, with cryptographic proof containing a minimal data summary posted to the Ethereum mainnet. Polygon's ZK EVM mimics the transaction execution environment of Ethereum's mainnet, and the open-source ZK EVM allows dApps to scale through transaction batching, unlocking higher performance. Polygon released 3 Polygon improvement proposals in September 2023, and these included a proposal for the transition and specifications that will see Polygon's tokens become Pol tokens, which will become the Polygon Proof-of-Stake protocol's native token. PIP-17 will include the initiation of the upgrade from Matic to Pol. This includes its transition to Pol as the native gas token and staking token for the Polygon ecosystem, as well as the launch of the staking layer and migration of Polygon public chains. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.